Lisa, Tom, and I are trying to work out where the bite point is in this credit market for this Fed to have a rethink. If it's not where we are now, where is it, Mike?
Yeah, it's interesting, John. If you look at high yield, typically it peaks at about 10% in the cycle. Right now, it's high eights. So I would say that's 10-ish, maybe somewhere around there, but nowhere near current levels. The Fed's looking right now at the tightening conditions and saying, yeah, it hurts. Yeah, it's painful, but this is a feature. It's not a bug. We're going to see more of it.
Michael, the clear theme here, and particularly off the important panel yesterday, is the Fed and other central banks are resolute. My reading of Meltzer, Anna Schwartz, Friedman, Richard Timberlake of the Georgia School is simple. That's baloney. They always succumb to the political zeitgeist, the political pressure. Is it going to be the same way this time?
I suspect the Fed and the other central banks will feel a ton of pressure from the politicians, Tom. It's almost inevitable. But the question is how quickly they, I wouldn't say cave, but have that impact their decision making. And for Chairman Powell in particular, it's really a challenge because he's got to look at that wall down at the Fed and say, you know what, Arthur Burns, worst chairman ever. William Miller, probably a close number two. I don't want to be number three. I've got to fight inflation. And I think that personal legacy is going to outweigh the politics for him for quite some time.
Michael Schumacher, harsh today.
Well, Mike, given that harsh view and given some of the bearishness that you have currently looking at this market, how do we get to 4% on a 10-year Treasury yield, given that we are looking at such a pessimistic scenario that usually sends people back into bonds?
Yeah, Lisa, it's really interesting. I think you've got to break it down into where does inflation end the cycle and what sort of real rate is going to be implied or expected at that point in time. So we think probably core inflation that is, ends the cycle maybe 250, perhaps a bit higher. And real yields, at least in our view, Wells Fargo have to be 150 plus. So that gets you to 4%. You might say, well, wow, 150 with a recession, how can that happen? Think about the last cycle. Granted, fairly mild, but still, at the end of that cycle, you had the real 10-year rate about 115. So 150 with incredible inflation, and really the Fed wanted to take out insurance against that inflation genie coming back out of the bottle. That seems pretty reasonable to us. That's how we get to 4.
What does 4% on a Treasury yield, for a 10-year Treasury yield, do to U.S. equities?
That's a really rough ride. So I think if you do get 4% on 10s, certainly speed matters. But let's say it happens sometime around the end of this year. That takes stocks down quite a bit. I'm not sure if they get down toward 3,000. I'll leave that to Chris Harvey, but it's going to be a pretty painful journey.
We'll catch up with Chris later and ask him that. Mike, I just want to finish up with your reflections on yesterday. What was the big standout thing for you? Listening to President Lagarde, listening to Chairman Powell, listening to Governor Bailey too.
When I listen to those three central bankers, John, it strikes me the ECB's got the toughest job. Certainly it's most closely impacted by the situation in Russia and Ukraine. And I listened to Christine Lagarde and say, well, okay, so the ECB's history of rate hikes is not particularly great. And on top of that, you've got the question of gas flows. I would circle in bold red, July 21st on the calendar. It's the ECB meeting. And also, perhaps more importantly, that's the day the Nord Stream pipeline comes off maintenance. Will the gas go back on? How much? That's going to drive policy for the ECB. So they're all uncomfortable, but I think that's the central bank that's got the biggest challenge ahead.